I'm Dave Girouard. I'm co-founder and CEO of Upstart. And I'm panicked about becoming an empty nester.
What up?
Not much. How you doing?
I'm doing good. Occasionally, Knut,
Yes.
we get, well, everybody's smart that agrees to come on this show. Mainly because they have this idea of what I may be like, and then they immediately are like, oh my God, time stands still for
And then
them.
they get so disappointed. Kidding.
Anywho, this guest is, we have a lot of smart CEO guests. We have venture capitalists, but we've had public company CEOs. Michelle's coming on next week. She's CEO of Cloudflare, but we've had Matthew Prince from Cloudflare. I don't know, $45 billion stock. That may be our biggest CEO. Today, I think his second biggest CEO, Dave Girouard, co-founder, CEO of Upstart, probably one of the hottest stocks of the year, but we're not going to talk about stocks. We may talk about momentum and how he feels about it,
All right.
unrelated to the stock, because we're not here to talk about the actual stock price and stuff like that on this show. You can do that all day on Stock Twits. But he's one of those people like we have on the show that just makes you feel like we just don't do anything. He left Google in 2012 after helping build Google Cloud. So
Wow.
That's quite a resume. To now running one of the fastest growing lending companies, Upstart. $UPST, took it public in 2020. It was kind of a slight, not a full-on pivot after raising celebrity venture capital money, like celebrity meaning Google and other big VCs. We got a lot of mistakes that he can discuss, but a lot of joy and glory in today's $25 billion company in just about 9 years.
Wow, that's impressive.
That's impressive. So anyways, I got a lot of questions because we rarely get public company CEOs on, but I just want to talk more about the business and the markets and lending and interest rates and how all these things and remote work and pivots and raising venture capital and the long slug of it all. So let's get right to it. Knut, let's dial up Dave. Dave.
Hi, guys. Great to be here.
It'd be great to be anywhere, but you're not. You're working at home?
Yep, sitting here in my spare bedroom that I've been pretty much camping out in for the last year and a half.
Tell me, is it harder to yell at employees by Zoom or in person?
Oh, it's actually much more efficient. You know, you can just yell at as many as you want, and you can even do it with a softer voice so you don't get so hoarse. So yeah, there's some certain advantages to being remote in terms of yelling efficiency.
I think the biggest thing that no one's talking about, but then again, I don't know because I don't run a company, is leadership in a remote world. What's the biggest thing that you've known? I mean, there's so much going on. You've got a $25 billion company, but how do you lead by email and by remote?
Yeah, it is a bit of a thing. I mean, you feel like you're on stage a lot more in the sense of, literally sitting there with a microphone in front of you, the lights going on and Zoom, et cetera. So, I mean, it's kind of like, I don't know, it's reminiscent of like Winston Churchill in London in 1940, standing in front of the microphone. I mean, you do it with words, whether it's written in an email or, we have very frequent all company meetings. And so, you just have these like communication moments that, in many ways, I honestly feel like it's, like I said, efficient, but it just works really well. I mean, all hands meetings were, before some people are in the room, some didn't show up. We got 2 different offices, this and that. Now it's like, hundreds and hundreds of people, but they're all in the same place. They're all a little square in Zoom. But in terms of communication, it's actually not bad. I think you just have to sort of get used to it. And there's a lot of, repetition, repeating the message and reinforcing the message. But in many ways, I think you have almost a more direct connection to everybody.
Let's talk about the business today, and then we'll go backwards. So Upstart today, $25 billion company. Define it for us here as if you were sitting in front of someone who's never heard of Upstart and I introduced $25 billion company. What is the business and the mission?
Yeah, we are a fintech company that is focused on applying artificial intelligence to the problem of consumer lending. And the heart of it is very sophisticated risk models that improve the process of originating consumer loans. We're a two-sided business. So we have a consumer-facing brand, Upstart, and we market and attract consumers to that. We refer consumers to bank partners who originate loans using our AI technology. So kind of a two-sided business. Almost all of our revenue comes in the form of fees that banks pay to us for referring consumers to them and for providing the technology to help them originate the loans. And the core technology is what makes it all interesting. The basic idea is with a much smarter, more accurate credit model, you can approve more people at lower loss rates and have, from a consumer perspective, what's not to like about, cheaper access to credit. And on the bank side, more inclusive and more profitable lending. So it is kind of a super interesting business.
The credit score, where is that? Friend, foe? Is that change? Is that going to change? How does that look in the next 10 years, and how does it affect your business?
Yeah, I just say the credit score has seen better days. I mean, it was invented, 30 plus years ago, and at the time, it was better than the alternative, which was some dude in a suit sitting across the desk from you, asking you, questions and making a judgment call over whether you get a mortgage or a car loan or what have you. And the credit score at least puts some sort of numbers to it. But in reality, it's a very, very blunt and inaccurate tool to understand whether, someone's likely to repay a loan. And so, yeah, I think it's waning, and its influence will wane over time. But it has been kind of heavily institutionalized across, regulation and is used by virtually every bank that you could imagine, pretty much all of them. So it's no small effort to eradicate it per se. We don't really care about eradicating it. We just want more accurate models that treat people fairly and get to better credit outcomes.
When you go public, you have two things. You have your business and then you have your public ticker, right? It's you have no understanding of the miracle of momentum and obviously earnings and financial metrics can drive momentum in the stock market. And it's a magical mystery miracle when it happens. But how are people discovering the company today? Or is it B2B? Like, how are people discovering you?
You meaning investors or you meaning consumers?
Consumers, customers.
We're kind of a coin-operated business. We spend tens of millions of dollars every month to attract consumers through, digital advertising, direct mail, partners that send us traffic. So it's one of these types of businesses where you spend a lot and then, if you're good at what you do, you convert it through your funnel and create revenue out the other side. And of course, we're developing a brand. So there's awareness and there's repeat usage and things like that start to bring some scale to the business. But it's that type of business. And fortunately, we've been able to be, both very fast growing as well as profitable. And that's, what I think makes us unique.
And so I look at the site today and I can, pay off credit cards. I can consolidate my debt. I can, you have a something else button. And then you have, I think what's new is refinance my car, right? So what do you get into next? Or is that basically covering the basis, or is like eventually anything open, whether it's asset lending or crypto lending or home financing? How do you know when to turn on something else?
Yeah, it's basically almost all flavors of lending are ridiculously inefficient, just in terms of the inaccuracies and the sort of waste in the system, if you will. So I guess we view it as trying to take a somewhat consumer-centric point of view, which is what are the things that people are borrowing and spending all their money on? And of course, credit cards, student loans, car loans, and then ultimately mortgages is the biggest category. And there's just incredible amounts of inaccuracy across all of them. So our expectation is we will participate in all of them with our bank partners because we think, AI applied to credit is just a, many trillion-dollar opportunity. And it's just a question of when. So we have to sort of quickly move to adapt what we've built in one area and sort of adapt it for the next area. And we've done that. We started in unsecured personal lending, got into refinancing of auto loans. We're, very soon to launch into direct auto finance, at the dealership, which is our next big effort. We definitely believe, mortgages is a big sector that we will play in. And there's also even, small business lending, in our view, is a largely unsolved problem. If you're an average small business and just need a $80,000, $100,000, $150,000 loan for something, just being able to do that quick and easy is something that we think is still a wide open opportunity.
In a world where you've got to know how to run a coin-operated machine, acquiring customers well, and then directing them well and having a happy customer, you've kind of figured out that flywheel. Is there any one thing, like why have you succeeded? I mean, part of the reason the stock has momentum, just from, I am a momentum investor, I've been watching the stock, is that you have done something that others haven't. Whether you believe it or not, that's what the market's saying. And so you're getting a multiple that's different than the past. What do you think that you've done differently, or is it any one thing, or is it a combination of things?
Well, I think the starting point in the market has always been that, money is the ultimate commodity, and lending is just a heavily commoditized business where everybody's pretty much doing the same thing. And, there's a long history of companies that came along and said, we have, a better mousetrap, we can do smarter lending and we'll have lower loss rates, et cetera. And, they have invariably ended in tears over time. So there has been for our history a starting point of disbelief that something could be fundamentally done differently in credit. And, there's a lot of reasons why we think now is the time and why we're able to do it. But for a lot of times with raising money as a private company, just trying to prove ourselves, there's just a lot of skepticism, honestly. And I think in the last year or two, really the models have really come together and accelerated. It's just really clear that we've built something different. And I think the public markets are appreciating that. And it in the end, it does come down to the things public markets care about, which is growth and profits. And we've been able to fortunately deliver both of those. And so I feel like there's this kind of belief adoption curve around a company like ours, and there's a long time to get there where you start to see there is something very different going on here. And I think those who got down that belief adoption curve faster have been rewarded.
I'm empty nest, and you were panicked about being an empty nester, and I'll waylay those fears later. But I look at my kids and I Venmo, and they saved, probably because I helped, but they saved. They don't overspend. It doesn't seem like a credit generation. So who is your customer? Who's discovering you in the coin-up Google, Facebook world? Who is coming?
Our business definitely trends toward sort of millennial, younger generation. I'd say the median borrower is probably 28, 29 years old.
Okay.
And it's because, we really started, that's a big part of the population that the traditional credit system doesn't recognize or work well with, that they don't have a lot of history in credit, et cetera. And there's definitely this notion of, I don't want to use credit cards, I'm going to use debit cards. But the reality, of course, is consumer spending is very high, and that hasn't changed. And nothing going on out there seems to be reducing the consumer's appetite for spending, other than maybe, the pandemic has kept them at home and out of restaurants. But generally speaking, in the megatrend, consumer spending is not slowing down. So it's almost hard to imagine that suddenly the need for credit is going to dry up. But yeah, young people have very different expectations, how they spend, how they borrow, and it just really represents an opportunity for companies like ours.
And in a world where valuations, I call it, we're beyond the spreadsheet here. You're profitable, you're growing, you have a great business, you have a great model, the flywheel is working. There's no place in any of your decks or in any of your, even last year, where you could have seen yourself as a $25 billion company. So how do CEOs today come to terms with these numbers, and how big is the market, and how do you deal with all these law of large numbers here?
Well, I know when you're going public and you're talking to bankers and things, it's always easy if you look kind of a lot like someone who's already out there, and hopefully someone successful, that you can say they're kind of like this or the comp is like that. And, we're just one of these cases where some parts of our business look like some other businesses, but as a whole, it really is a unique thing. So I would just say bankers and investors at first look kind of go, I'm just not sure how to think about this thing. Is it like an internet marketplace? Is it a lending platform? Is it a software company? And so I think we had to sort of fight through that. But, like I always say, the most valuable companies in the world aren't like anything else, right? If you think
Yeah.
about Google, or you think about Apple, Facebook, there's nobody that they're like. Amazon. So I think uniqueness is a positive attribute, but it does make valuing the company hard. And of course, look, I'm just sitting here going like you are. I only very indirectly affect the stock price. I pretty
Right.
much try to make this business go, and what happens happens.
So, who was the North Star then? Who is the company and what is the TAM out there that for someone just tuning in today and says, oh, it pulls up the stock quote, says $25 billion company, I like Dave. What is the possibility out there? What is the TAM for this, and who is the leader?
Yeah, I mean, the way I would quantify it is to say, look, there are several $1 trillion in loans originated, maybe $3 trillion in loans originated in the US every year. And most of that is just crazily inefficient and can be improved with AI. And we're not going to do all of that today or next year, or even the next 2-3 years. But over time, all lending is going to move toward modern math and data science. It's just unquestionable to us. So that's how we think about the TAM. We're going to pragmatically go after it, but there's no ceiling that we're going to run into anytime soon because lending is so enormous. I mean, just U.S. banks, according to the FDIC, there's something like $400 billion. This is maybe a couple of years old data, $400 billion in net income earned by banks in the U.S. And I mean, that's like twice the amount of profits in the entire technology industry. So just the scale of lending and credit as an industry is just vast. And there's just really not much in terms of applying AI, which is obviously a very modern, leading edge type of technology that's changing industries all around, that are applying it to this mega industry. And that's why we think the opportunity is there. And I think people are seeing our ability to execute against that opportunity.
Have you done it? I can't find, but I could be wrong. You've ever done a big acquisition, or have you?
We've done just one acquisition in our history. Earlier this year, we acquired a company called Prodigy, which is essentially delivering software to car dealerships to help them effectively modernize the process of buying and selling cars. And that's now been integrated, and we'll be offering Upstart AI-enabled loans through that platform and through car dealerships that use that software.
Very interesting. And so theoretically, you would do that maybe to break into the mortgage business too, and even crypto one day or something? Or do you just think every industry is different?
Every industry is different, of course, but we look for inefficiencies, right? We're sort of like Jeff Bezos, like your margins are opportunity, and we just look for places. And sometimes you have to look to the securitization market or some other type of data to see like how this industry works. And I'll give you a piece of data that we find interesting about the mortgage industry. If you looked at the number of mortgages offered to consumers with credit scores under 660, sort of middling credit score, back in the early 2000s, before the huge disruption, and you compare that to say 2015, post the disruption, there's something like 1 million fewer mortgages originated in 2015, and it just tells us that something happened there. The baby went out with the bathwater when suddenly we wanted to. The mortgage crisis happened and banks pulled back and they're getting conservative. But at the same time, suddenly potentially millions of people who are creditworthy don't have access to a reasonably priced mortgage. And so those are the kind of opportunities we like to look and reasonably quantify just to see that there's something real there.
Very interesting. Fintech's so big, so I focus on like investing and do-it-yourself and financial services, but your fintech company, I had never heard of BNPL. We called it layaway when I used to watch the Jeffersons and the Good Times. And TV in the 70s was about layaway, and if you couldn't afford the toy, you laid it away, or a couch or whatever. So BNPL is a new term to me. Does BNPL disruptive to you, or is it disruptive for you, or how do you embrace or think about that?
BNPL has the potential to be, I would say, very disruptive, first and foremost to the Visa, MasterCard rails, and that sort of strong market position that's been there for a long time and just never been even remotely disrupted. Because I think BNPL is first and foremost actually about payments more so than about lending.
Right, because I see like the clothing companies, like $60 people are doing PN. So that's what I just said. I don't understand it because it really isn't about lending. It's just about an experience or something.
Yeah, it's adjacent to it, but it's just like, credit cards have 30-day grace periods. And that was one of the enticements that got people using credit cards. And BNPL might have pay in full or what have you. But, ultimately, it's breaking that duopoly of, Visa, MasterCard, in my view. But with respect to, Upstart, a lot of our loans are used to pay back credit cards. But at the same time, I mean, one thing that's very clear about buy now, pay later is their value prop to the merchant is that they increase the amount that consumers spend. So in any world I live in, if you're going to increase the amount consumers spend, you're not going to result in net reduction in consumer debt. It just doesn't seem to add up.
So you love it. God bless BNPL.
I don't know if I love it or not. I mean, we tend to be pro-consumer, and if it's convenient, it works great. If it gets people sort of over their skis and buying more things that they don't really need or want, I'm probably a little less excited about it.
Now, over your bed, is there a flashing 10-year rate sign? Do you watch the 10-year rate, and do you watch interest rates? Like if I'm out for dinner with you, and who's on speed dial? The bond guys?
We're not a terribly rate sensitive business in the sense that, most of the use of our loans. I mean, if you're, I don't know, mortgage businesses tend to be very rate sensitive, especially if you're like into mortgage refinance and rates go up, suddenly mortgage refi dries up. So there's other types of businesses that are just far more rate sensitive than we are. Generally speaking, most of our loans are used to refinance more expensive flavors of debt. The spread there is pretty significant. So, I mean, fortunately for us, it's just not a day-to-day type of concern.
All right. So now I think, because it's enough for me, I know enough about the company and how lean it is. Well, one more question. AI. What's your definition of AI and what is Upstart's? And we'll tie it back into, when AI became important to you and Google, et cetera, because you've got a long history at Google. It's thrown around loosely, just like blockchain's thrown around loosely. What does AI mean to you in the company?
Yeah, I mean, AI basically means software that is learning, improving on its own, merely by experience, merely by the growth in data that it's used to train. So interaction with the real world is generating data, and that is improving the algorithms bit by bit. And so it's this very sort of sophisticated relationship between algorithms and training data that over time, if you sort of grow the amount of training data you have, and then you increase the sophistication of the algorithms and their ability to interpret that data, what you're really doing is having a more accurate model. And in our case, in most AI, it really comes down to predicting what's going to happen in the future, which is, notionally sounds like magic. But AI does exactly that. It's trying to predict what's going to happen next and what action this particular business should take. So, it's a word thrown about, and I think it's easy for businesses to say that. But having an AI system that's in production, meaning it's not somebody sitting in a corner analyzing data with a spreadsheet and drawing conclusions about it, but actually a system in production that is learning and improving itself in real time, that's the heart of AI.
Yeah. So if this is the Olympics, I would say Upstart is an Olympic champion because it's achieved momentum. We don't know how long it can last. Obviously, it's driven by fundamentals and the behavior of crowds. Bravo. Congratulations. You got the gold medal. Everything looks rosy, but Upstart has not been a smooth ride. What's momentum today was chop and upheaval and stress. And not that there's no stress today, but when the flywheel's working and you have a basic understanding and you trust the software and things are working, life is good. Upstart was not always like that. So take me back to when you decided to start it and what's your thinking? Because you have a great career at Google. What is the trigger point?
Yeah, it's certainly not been an easy road. Going back to 2011, I had been at Google. It was coming up on 8 years. And certainly it's a great company, and it would have been, in many ways, easy decision just to hang my hat there and punch the ticket for the rest of my career, frankly. I mean,
because you had already been there for the Dutch auction, or were you after the Dutch auction?
I joined probably 6 months before the IPO, so I was there pre-IPO, probably right before the S1 came out. So I through the interview process, the very early days, Google was still a bit of a mystery in terms of nobody really knew how big of a company it actually had already become. So I was just there for that little period where nobody really knew that much about Google. And then suddenly the S1 hit and people realized this is a multi-billion-dollar advertising business. And I think the world was kind of floored. And I was there from, 15, 1,700 people, something like that, to, maybe 40,000 when I left. So it was definitely the good years. Google's had mostly good years. But I was like, look, I built this cloud business, and it was always called Other, at Google at the time. So whatever meeting I was in, it was about AdWords and then AdSense and then Other. And, it was one of the biggest cloud businesses out there, maybe except for Salesforce. Salesforce was probably the biggest cloud company at the time, maybe still is. And in any case, I just kind of got excited to try to do something on my own. I was in my mid 40s and, thought, hey, if I'm ever going to do this, I might as well do something. And I had a bunch of different ideas, and one of them became Upstart. And so I pulled the trigger and into something I knew very little about. And, that was both exciting and foolish. But the first product my co-founders settled on, something called an income share agreement, was frankly a complete failure. Just enough success to keep us pulling on the string for a year or so. And then at some point, I brought my co-founders to a coffee shop and I said, we have about 3 months of cash left, and I don't think turning these knobs anymore is going to fix this thing. So maybe we should think about something different. And we went through a really fast pivot to what amounts to something close to what we do today, a consumer loan product based on, very fancy math. And it was sort of a glove save. It was one of those trying moments, but we were a small company able to do that. And from there, it's been a lot of, we were not the biggest, we were not the first in the industry. So we just had, so much skepticism built in. But, over time, we felt very convinced on the path we were on and what we were doing. And eventually we kind of brought the world along with us.
So explain income share agreements, because I hear about them. I'm not interested in them, but explain what they were even back then. Like, you were way ahead of the curve. We're still ahead of the curve. So what are they?
Yeah, income share agreement, the notion generally, this goes back to like Milton Friedman type economics, but you receive some money today, and in return, you pay back a fraction of what you earn over time, over your lifetime, perhaps. And this notion of it's almost like selling equity in yourself. And
correct.
As a good old friend said to me, oh, it sounds like, indentured servitude with a smile. Yeah. And, to some extent, that was always the problem. It was like the idea of selling your future income felt almost dystopian to some people. But in any case, in at least the way we approached it, it didn't scale. I mean, it was a nice little marketplace, but it was a couple of zeros off of the scale we needed to make a real business. And ultimately, we pivoted away from it.
Wow. And so talk about who your investors were at the time.
Well, I don't know if I want to name all the names. We had some nice institutional investors early. And, one thing I will generally say is note of caution is when you have institutional investors early, it might sound good. You like to have their name attached. But if they decide they're not really excited to lead that A round later, you're going to have a hell of a signaling problem. And that's exactly what we had, which was some early name brand investors, including my former employer, who weren't suddenly ready to lead the A round. And of course, everyone else in Sand Hill Road says, well, why aren't they leading the round? And so, it was one of the earlier lessons learned. I had no experience in fundraising, but I always tell people when they ask me, should I take this check from, big venture firm X or Y for my seed? And I was like, just be careful, because if they don't want the A, you might find yourself in a tricky position.
Yeah, there's so much to learn there. But your experience came out of Google. And so, of course, like, you're going to leave. The Google has that reputation. You're not going to say no. But that's something that a lot of people learn the hard way is...
Yeah, the easiest round we ever funded was our seed round. It was just me, and I was leaving Google. And, that was enough to get enough interest to put some money together. And I wasn't even trying to raise it, actually. So it was one of those, like, it was the kind of story you read about, which is, wow, I wasn't trying to raise money, but people are offering me checks. But then the rest of the way, it was like, wow, nobody wants to give me money. And we got to figure out how to get from here to there. So we had a very unique experience.
All right. So you do like a 20-40% kind of turn, pivot, whatever we're going to call it, into something with more zeros attached. What is it early that matters? Is it recruiting? Is it the product market fit? What part do you think you guys were great at? Obviously, you found some great investors, you found some product market fit, but then what's next? What really gets it going?
Yeah, I think, we created a pretty good execution machine. And I think it was just the people I got in with early and brought on board. And I just think we were able to identify people to join the team that just could deal with the chaos, deal with the unknowns, the lack of product market fit. I mean, when we moved from income share agreements to loans, we had about a dozen people and we didn't lose anybody. We kept everybody. We just said, hey, we're going to stop this and start that. Let's go. And I think ever since then, it is always down to the people. I mean, we have problems every week. It's just reliable that every day you're going to wake up and something's going to hit you in the face. But you end up with this paranoia on one side, but on the other side, you have this underlying confidence that this team has been through a lot, really knows how to handle difficult situations. So whatever the world's going to throw at us next week, we're feeling pretty good about. And that is really what it is. It just comes down to who you have on the bench, what experience they have working together. So they kind of can just look at each other and say, yep, here we go again. And you can execute against that because, even after we moved to loans, trust me, it was not clear sailing. We had all sorts of problems and issues, and the industry went upside down for a whole year. And so, but all the way through it, we kept the core crew together.
And what are the things at Google that you took away that have helped the most? What makes Google so great? Cloud was an asterisk. When did the light bulb go off for Google? How did it become important?
How did cloud become important at Google?
Yeah. When did they finally just say, oh, God, this isn't an asterisk anymore?
Yeah, I think there was a little bit of, it grew to $1 billion or so when I was there. And I was always like, hey, when I got there, I thought when it got to 100 million, they would care. And, Google was many billion by then. And by the time it got to $1 billion, Google was probably 40 or 50 billion. So, it was always this problem of no matter what, it was a single digit percentage of the company. But, I think, honestly, if I had to say anything, is when Sundar Pichai became president, he was my last boss at Google. I think he really saw this thing as, look, we're not just an advertising company, we're a technology company. And there's many things we can be doing here. And this cloud business, which I think, being honest, was important, but not the same level AWS has been at Amazon. It didn't for years have that level of attention or care. And the best I tried. So partially I blame myself for not getting it to that level of attention. There's also some maybe economic reasons why Google would care a little less about a cloud business than would Amazon, given margins in their core businesses, if you will. But in any case, I think Sundar, when he took over, he really understood and saw and appreciated the opportunity and really started to pour a lot of resources into it.
And today, what are the fintech companies that stand out to you? You're at 25 billion. So who's it out there that's doing amazing things, even at scale, small or big?
Well, one of the companies I admire just because of their boldness, I would say, is Square. And I always think of fintech businesses as you have consumer-facing businesses, you have merchant-facing businesses, and you can have bank and lender-facing businesses of that sort. And very few have the scale to do something both with consumers and with merchants the way Square does. And that's why I think if you just think about Square being used by millions of merchants around the world and millions having the Cash App, suddenly they put Bitcoin in the middle of it, and you do have a viable mechanism for payments. And they actually have critical mass on both the merchant and consumer side to make that happen. And I just kind of see how they've walked down that road, and hasn't all played out yet. But to me, it's obvious why Jack cares so much about crypto and about Bitcoin. because he's in position and Square is in position to just build an incredible company that both serves merchants well and serves consumers well.
And do you think the game, whether he knew it at the beginning or end, is, Visa, MasterCard are railroads, right? I call them 8 to 80 companies, but, railroads every few years hit all-time highs, no matter how bad the economy gets or how good the internet gets, things are moving. Do you see MasterCard and Visa as disruptible? And is that what Jack sees? Or is that something that you're rooting for? Or does it matter? Or is it they'll always be around in America? What's your take there?
I think they are disruptible. I think they could sort of move to the background a little bit. And I don't think Jack cares about disrupting Visa, MasterCard. I don't know him. So honestly, I'm just more reading the tea leaves of what, the signals you get from Jack. But I don't think he has it in him to just care passionately about Visa, MasterCard. I think he just wants to enable, an experience for consumers and an opportunity for small businesses that they get in the way of. So,
it would just happen. I guess you're right. Like he doesn't wake up like that's not his biggest worry.
Yeah, he just has, I think, very clear views of how he thinks things should work. And when things in the real world today get in the way of that, he's just going to work his way around them. And I think he's doing that exceedingly well right now.
Any personal financial passions? Is crypto a passion or interest?
No, I haven't really played in the crypto world at all, to be honest. And I think just being wrapped up in what I'm trying to do, I haven't had time to give it the attention. I mean, I read about it, learn about it. I'm a sports nut, so I'm super interested in the idea that suddenly college athletes can earn money and just what that implies, not just for college athletes, just the broader picture of people able to sort of take control of their brand and themselves. And, between just again, the changes in the rules, as well as things like NFTs and such. So I think there's just a lot of things going on in technology and crypto that are going to unlock a lot of potential for people, especially creative people, athletic people that just didn't have as clear of a path to their own brand. And that's some of the stuff I get excited about.
And so we talked about panic. There was a real panic in March 2020. What do you remember what it was like at Upstart then? Like what you were thinking and some of the big decisions you made?
Yeah, I remember my co-founder, Anna, sending this message to Paul and I, our three co-founders here. And she said, hey, I think we're going to have to start asking employees returning from trips to China to stay out of the office for a few days. And I thought she had just lost her mind. I was like, are you kidding me? We're going to tell people to stay home because they visited China. And I just was incredulous that this could really be something. And probably a week later that the world shut down and suddenly we were remote. So, I mean, we were a company built to be in one room at a couple of tables just working together. So the notion that suddenly we could all be everywhere, and frankly, we're spread across the whole U.S. at this point, was about as foreign to me as I could have imagined. And now, it feels a little natural. I mean, I'm going on a trip to New York in a couple of weeks, but I've hardly been on a business trip in a year and a half.
And where is headquarters? San Francisco?
Notionally, it's in the Bay Area, San Mateo, and then we kind of have a co-headquarters in Columbus, Ohio, which actually has more than half our people. But as of 3 months ago, we basically decided we're going to hire anywhere in the U.S. And the only requirement will really be that you come to one of our offices probably once a month for kind of a little get together with your team. But we're becoming we call it digital first. It's really kind of a remote first like notion, but not getting rid of our offices.
Very cool. And the idea of emptiness, you said it's something that panicked. It was the first thing that came to your mind. I mean, not mean anything. I'm living an empty nest life. What excites you or panics you about that?
Well, my wife and I, our life just develops around our kids, and I loved just being with them. Everything they do, their sports, their whatever they do, and just all of a sudden it's just like, wow, we're not going to get back to this. Once it's gone, it's gone. So. That is a scary moment, but I'm a forever optimist. The change of seasons, I always love. I'm like, wow, the fall's here. It's great. So I'll get my head around it and I'll get excited for the freedom my wife and I will have and all the cool things I'm sure my kids will go do. But there is this like, wow, this only goes in one direction. And that itself is a little scary.
And when were you raised in an entrepreneurial house, or when did you get into tech?
I was about the opposite of that. I grew up outside Boston. My parents, my dad was in the military. My mom was a teacher. They were just like thrilled to be able to move to the suburbs and buy a home. And I just grew up in that environment of like, no net worth to speak of, hardworking, both parents working just to get 6 kids clothed and fed, et cetera. So, the notion of entrepreneurialism didn't frankly hit me at all until I was out in California and suddenly it was all around me and I started to go, wow, it sure seems to be working for a living.
And how'd you pick Google, or did they pick you?
I had been in the Valley for a while. We had our first child about to move back to Boston with my wife. And, somehow I stumbled into this Google thing and I didn't know what they were. I mean, nobody knew how big of a success they were, but I ended up in this conversation and in the last interview was with Larry Page, and they wanted me to do this like enterprise search technology they called the Google Search Appliance. And I said to Larry, like, I don't know anything about enterprise or enterprise sales whatsoever. And Larry said, that's fine. I'm sure you'll figure it out, which is more or less how Google operated back then.
Well, they had already, the interview process, so that's something to learn from. That was probably a grueling internet process. But how old is he now? Are you guys same age, or is he in his 50s, do you think?
No, he's probably not in his 50s yet. I think he's probably mid to late 40s. So no, Larry and Sergey are both, were younger than me, which, no surprise. I'm pretty much older than everybody in the Valley at this point.
And so advice that you give your kids that you think, I give my nieces and nephews all kinds of advice about, sales and networking. What are the things that you try and get your kids to do? Is it something about reading, or is it something about networking? Is there anything that you try and encourage?
My kids pretty much don't listen to me, so I'm not really sure it matters, but they're very different from me. They're not into technology. They're not, so many people in the Valley like, oh, my kid's taken the 7th level, coding course and writing in Python and this and that. And my kids are into film and either writing or producing in video. They're much more artistic than I am. And so I just like get them excited to do what they want to do in their lives and not, and certainly don't worry about what I do or has anything to do with what I do. And it seems to work out nicely because they don't really seem to listen to what I say anyway.
The AI stuff, who's leading that? Like, where's the best recruiting coming out? I don't want to give up any secrets, but like, is it US or is it China or is like, what parts of the country are doing the best work?
Well, AI in people that really build models, the term data science or data scientist is so overused. It can be like someone who can write an Excel macro or examine a spreadsheet, but people who really build sophisticated models, typically, writing in Python and there's very few of them. I just say for every 100 software engineers in the US, there's probably one that you might call a machine learning engineer that can actually create models. So it's sort of a rare beast. And, they come out of different PhD programs. Sometimes they come with stats backgrounds. Sometimes they come with physics, and they can be in high frequency trading. They end up in a lot of esoteric fields. So it is like one of the enormous advantages my company has, Upstart has, is that we've assembled a critical mass of them, and they just sort of gravitate towards each other and want to work with others who can help them get better at what they do. So it is a very kind of rare species out there. And that's one of the real advantages we have is we've assembled an amazing team, and it continues to attract them. And now, of course, being able to hire them anywhere in the US is also a huge advantage.
And if you could just take an afternoon off the grid, what is the preferred choice? Left to your own free time, and you can't work, and you're not allowed to return email, what would be the thing that helps you refresh?
I've always been a running nut. I ran competitively in high school and college, so always been a runner, skier, outdoors type person. I'm a sports nut. My kids' sports, college sports, professional sports. So, those kind of things. That's why I don't spend all that much time. I haven't written a lot of code in a long time. I'm not spending too much time thinking about crypto because I'm not a metaverse guy. I really do appreciate the real world and the people in it. So that's where I spend my time.
Yeah, me too. Me too. I hit an age where I'm like, I get it. It's coming hard, but the real world's pretty cool. I really appreciate your time. It's been fun. Are you liking, you've done a few podcasts. Like, is it something that, like, are you listen to podcasts, or is it just something that you're experimenting with? Like, what is it about podcasts?
Yeah, I never used to listen to them pre-COVID, running or doing whatever doing. I was always listening to music, just got used to, and just finally figured out I had enough time. I really should be broadening my thinking, and podcasts are an awesome opportunity, and yours as well as several others that I just got addicted to. And so, yeah, it was fun. And then suddenly I thought, wow, I think I could do that. I might have something useful to say here and there. So it is just a chance to sort of like keep stretching your thinking one way or another. And I love to listen to stories from other founders. I invariably learn something, and they make me think a little differently about my business in some way, because in many ways their experiences will parallel mine, but there's always something unique or different that they do or they say or they think about that changes how I come to work the next day. And that's what's most valuable to me.
Well, congratulations. These things are miracles. It's fun to be able to talk to CEOs and kind of hear the origin story, but also hear how the business is evolving. And Upstart is an amazing company, not a smooth ride, but I'm enjoying the momentum for you. Hope it continues, and have a great end of the year. I appreciate your time today, Dave.
Thanks, Howard. Thank Knut.
Thanks.
Thanks, bye.
So there you have it.
All right.
Big time, bigly CEO. Regular dude, he just hit me up. He goes, hey, I like your podcast. I'm like, you have some spare time. And but he's all business.
Yeah.
I pride myself on trying to get a chuckle. He's processing a lot of stuff.
He's got a lot of energy.
You can see the Google. Well, it's pent up, and he's not giving away much. And you see the way he framed. We're running a machine here. We're putting pennies in the machine and turning dials. And when the dials weren't working, no matter how much I tweak these dials, we gotta find something different.
Yep.
It's a special type of wiring, and that's and then when you hear you come out of Google, that's why Google people are backable. But just because you come out of Google, as he showed you, does not mean it's all roses. Like, if they haven't make that pivot, that's a small business. So I'm glad we covered that as well. But this lending world is a massive world. And, I'm just starting to hear of Upstart. Think about all the ads that you've been pounded over the head with over the years from American Express and Capital One.
Oh.
And this is somebody who's just using the internet and lead gen without TV. Maybe they'll get to TV one day, but you just think about what you said, Amazon, your margin is my opportunity.
Yeah.
When we go to college and we'd see Amex all over the place in Capital One, and here's Upstart doing this stuff and building brand without having to do all that.
Right.
So great to have CEOs. So you are listening to Panic with Friends. And like I said, we are talking to great entrepreneurs, venture capitalists, traders, investors. This time, Dave Girouard, co-founder, CEO of Upstart. I think it's a $25 billion, $300 stock, one of the best performing stocks of the year. Just a regular guy, panicked about the same things other 50-year-old dudes are panicked about: empty nesting and will my kids listen to me, and dealing with remote company, people just getting shit done. Our goal here is just to, read the tea leaves, talk to people, get ourselves a little bit ahead of the world. And if you like us, just search my name, Howard Lindzen, on Spotify, Google. We have a YouTube channel. Subscribe. You'll get an alert once a week where we do this show. Knut, thanks for doing this. See everybody soon. Thanks, StockTwits.
Howard Lindzen is the founder and general partner at Social Leverage. All opinions expressed by Howard and podcast guests are solely their own opinions and do not reflect the opinion of Social Leverage or StockTwits. This podcast is for informational purposes only and should not be relied upon for decisions. Guests may maintain positions in securities discussed in this podcast.
And he's in the machine and turning dials. And when the dials weren't working, no matter how much I tweak these dials, we gotta find something different.
Yep.
It's a special type of wiring, and that's, and then when you hear you come out of Google, that's why Google people are backable. But just because you come out of Google, as he showed you, does not mean it's all roses. Like if they haven't make that pivot, that's a small business. So I'm glad we covered that as well. But this lending world is a massive world, and I'm just starting to hear of Upstart. Think about all the ads you've been pounded over the head with over the years from American Express and Capital One.
Oh.
And this is somebody who's just using the internet and lead gen without TV. Maybe they'll get to TV one day, but you just think about what he said, Amazon, your margin is my opportunity.
Yeah.
When we go to college and we'd see Amex all over the place in Capital One, and here's Upstart doing this stuff and building brand without having to do all that.
Right.
So great to have CEOs. So you are listening to Panic with Friends. And like I said, we are talking to great entrepreneurs, venture capitalists, traders, investors. This time, Dave Girouard, co-founder, CEO of Upstart. I think it's a $25 billion, $300 stock, one of the best performing stocks of the year. Just a regular guy, panicked about the same things other 50-year-old dudes are panicked about, empty nesting and will my kids listen to me, and dealing with remote company, people just getting shit done. Our goal here is just to, read the tea leaves, talk to people, get ourselves a little bit ahead of the world. And if you like us, just search my name, Howard Lindzen, on Spotify, Google. We have a YouTube channel. Subscribe. You'll get an alert once a week where we do this show. Knut, thanks for doing this. See everybody soon. Thanks, StockTwits.
Howard Lindzen is the founder and general partner at Social Leverage. All opinions expressed by Howard and podcast guests are solely their own opinions and do not reflect the opinion of Social Leverage or StockTwits. This podcast is for informational purposes only and should not be relied upon for decisions. Guests may maintain positions in securities discussed in this podcast or StockTwits. This podcast is for informational purposes only and should not be relied upon for decisions. Guests may maintain positions in securities discussed in this podcast.